All right, let's dive right in, shall we? We're talking Jyoti CNC Automation Ltd today. Got a whole pile of reports and presentations here, and I gotta say, it's pretty exciting stuff. We're gonna make a deep dive into their Q2 FY25 results, try to understand how they're doing, what moves they're making, and what all this means for their future.
And judging by what I've seen, it looks like a pretty bright future with big plans for expansion, AI integration, really some cutting-edge stuff.
Sounds promising. But first, let's get everyone on the same page. For those who might not be familiar, can you give us the quick rundown on Jyoti CNC?
Absolutely. So we're talking about an Indian company founded back in 1989 that's really become a major player in the CNC machine industry. They've gone global with subsidiaries all over France, Germany, Canada, Turkey, you name it. And their reach is pretty impressive, over 130,000 machines installed in more than 60 countries.
130,000 machines. That's a lot of machines. So what kinds of machines are we talking about here?
They've got a really broad product portfolio, over 200 different variants, from those entry-level machines to the really high-end stuff, and they're used across so many industries: aerospace, automotive, electronics, the list goes on.
So basically, if you're in manufacturing, chances are you've encountered a Jyoti CNC machine, or you probably will at some point.
Yeah.
Now let's get to the heart of it, their Q2 FY25 results. And I gotta say, those numbers look pretty impressive.
Yeah, they're definitely strong. Revenue jumped by a solid 42.47% year over year, landing at 4,306.71 million.
Okay, that's a big jump. What's fueling that kind of growth?
Well, if we dig a little deeper, we see that their profit for the period absolutely skyrocketed by a staggering 352.81% year over year, hitting 758.79 million. And their EBITDA margin, which, to put it simply, tells us how much profit they're making on each rupee of sales, that also expanded significantly to 25%, up from 18% last year.
Okay, pause for a second. For those of us who aren't financial experts, what does that mean in real-world terms?
Right, good point. Basically, think of it this way. For every euro in sales, Jyoti CNC is now keeping 25 as profit after covering all their expenses. That's a big improvement, shows they're becoming more efficient, more profitable.
So it's not just growth, it's smart growth, especially in this economic environment, which is no easy feat.
Exactly. These results really show their resilience in the face of, global economic challenges.
Now, I'm curious, what are some of the specific factors behind this strong performance?
Well, one of the key drivers is their really robust order book, which has grown by a whopping 41% year over year. As of September 30, 2024, it stands at a massive 42,893 million. So that's a lot of future revenue already in the pipeline.
So the demand for their products is definitely there, but can they actually keep up with that demand?
It seems like they can. Their capacity utilization, which basically measures how much of their production capacity they're actually using, is sitting at a pretty healthy 83.40%. Means their factories are busy and they're getting those orders out the door.
That's great to hear. But I'm guessing with an order book that full, they're already thinking about how to handle even more business.
You're absolutely right. And that leads us to one of the most interesting parts of their plan's capacity expansion. They're making a big move, investing 400 crores, which is roughly US $50 million, to significantly ramp up their manufacturing capacity over the next 2 years.
Wow, that's a serious investment. What kind of scale are we talking about?
Their goal is to boost their total installed capacity from 4,400 machines per year to a massive 16,000. So it's pretty clear they're not just meeting current demand, they're anticipating even greater demand in the future.
I'm seeing a pattern here looking ahead, strategically positioning themselves for growth.
Exactly. They're not just reacting to the market, they're proactively shaping their own future.
This expansion plan, though, isn't that a little risky given the global economic uncertainty?
It is a bold move, for sure. But with their strong order book and high capacity utilization, they have good reason to be confident, right? They're not just betting on future demand, they're responding to real signals from the market.
Makes sense. But it's not all about machines, is it? There's more to success than just the hardware.
Absolutely. And this is where things get really interesting. One thing that often gets overlooked when we're looking at financial reports is the importance of human capital.
Yeah, it's easy to get caught up in the numbers and forget about the people who are actually driving the success.
Exactly. But Jyoti CNC seems to get it. They're putting a lot of emphasis on investing in their workforce through their Center of Excellence.
Okay, tell me more about this Center of Excellence. How does it work, and what kind of impact is it having?
It's all about giving employees opportunities to develop their skills, technical training, leadership programs, even chances to go for further education. They want to give their workforce the knowledge and skills they need, not just for their jobs now, but for future growth within the company.
Smart move. By investing in their employees' development, they're really investing in the company's long-term success.
Absolutely. And it goes beyond just technical skills. They're also focusing on things like problem solving, communication, teamwork, those soft skills that are so important for building a collaborative and innovative culture.
So they're creating an environment where employees are constantly learning, growing, being challenged.
Exactly. And it seems to be working. They have a very low employee turnover rate, which tells you that people are happy, they're loyal to the company.
Makes sense. People feel valued, feel like the company's invested in them. They're more likely to be engaged, more committed to seeing the company succeed.
And that positive work environment probably plays a big part in their strong culture of innovation, too. It's not just about having the latest machines. It's about having skilled, motivated people who are always looking for ways to do things better, to innovate.
And their commitment to R&D definitely shines through in the products they've developed. We've already touched on the Q5 FIE, the Tachon 4FT, the TS200. What else can you tell us about their R&D efforts?
They've poured a lot of resources into their R&D facilities, both in India and France. They're constantly pushing the limits of what's possible with CNC machining.
It's not just about making machines that are technologically advanced, though, right? It's about understanding what their customers need and finding solutions that really work for them.
You got it. They're taking a very customer-centric approach to innovation. They're constantly getting feedback from their clients, working with them to develop custom solutions, and always looking ahead to anticipate what's coming next in the industry.
So they're not just selling machines, they're building partnerships. That's a powerful combination for any company in any industry.
Couldn't agree more. That focus on relationships, on top of their commitment to innovation and employee development, creates a cycle that just keeps feeding their growth and success.
So if we had to sum up what we've learned about Jyoti CNC Automation Ltd, so far they're financially solid, they're making smart moves, and they've built a culture that values people and encourages innovation.
Definitely a company worth keeping an eye on. They're not just riding the industry wave, they're out there shaping the future of manufacturing.
It's been fascinating getting this inside look at what makes them tick. But there's still more to uncover. We'll be back to dive deeper into their financials in part 2. Don't go anywhere. All right, welcome back. Let's dig into those financials now and see what else we can uncover about Jyoti CNC.
Sounds good to me. Let's take a closer look at their profit and loss statement, their P&L for Q2 FY25. As we mentioned before, their revenue from operations saw a pretty remarkable increase, up 42.47% year over year.
Yeah, but it wasn't just about raising prices, right? They actually sold a lot more machines, which is a much better indicator of real growth.
Exactly. Their total consolidated revenue for the quarter, which includes all their global subsidiaries, reached $4,306.71 million. That's a significant jump from $3,022.83 million in the same quarter last year. And what's really impressive is that this revenue growth goes hand in hand with improved operational efficiency.
Right, we talked about that impressive EBITDA margin expanding to 25%, up from 18% in Q2 FY24, shows they're keeping those costs under control while boosting sales, which is so important for long-term profitability.
Definitely a sign of good management there. It's not just about making money, it's about making it efficiently, which is a key indicator of long-term success.
Now let's shift gears a bit and talk about their balance sheet. I know it's basically a snapshot of their financial health at a particular moment in time, showing their assets, liabilities, and equity. But for those of us who aren't accountants, can you explain what that means in the context of Jyoti CNC's growth strategy?
Sure, think of the balance sheet as the foundation of a house. A solid balance sheet gives a company stability, the ability to handle challenges, and the freedom to go after new opportunities for expansion and innovation.
Okay, so how strong is Jyoti CNC's foundation?
Well, if we look at their balance sheet as of September 30, 2024, their total assets were $22,052.41 million. That's actually a bit lower than at the end of the previous fiscal year, mainly because of those strategic investments they're making in capacity expansion.
So they're strategically using their resources to fuel future growth, even if it means a temporary dip in certain asset values. It's a calculated risk and one that seems to be paying off.
Exactly. And when we look at their liabilities, we see a similar trend. Their total liabilities decreased to $7,111.54 million, down from $8,137.19 million the previous year.
Is that decrease in liabilities a good thing? What's causing it?
It's definitely a positive sign. It's mainly due to them paying down debt, thanks in part to the proceeds from their successful IPO. By reducing their debt burden, they're freeing up more resources to invest in those future growth initiatives.
That's a smart financial move. They seem to be striking a good balance between managing their current financial obligations and planning for the future.
Absolutely. And to really understand how their finances are flowing, we need to take a look at their cash flow statement. This statement tells us how cash is moving in and out of the company.
So it's like looking at their financial circulatory system, how they're generating and using cash to keep things running smoothly and to fuel their growth.
Precisely. Now, Jyoti CNC generated 939.24 million in cash from their operating activities during the first half of FY25. Now, while that number might seem negative at first glance, it's actually an improvement compared to the same period last year. This indicates they're managing their working capital more effectively.
And we have to keep in mind that they're in a growth phase, which often requires significant upfront investments that can temporarily impact cash flow. It's kind of like when you buy a new house, it's a big expense at first, but it sets you up for a better future.
Good analogy. Now, their cash flow from investing activities was negative 1,051.56 million for that same period, the first half of FY25. This is largely due to their investments in things like property, plant, and equipment, as well as acquiring intangible assets.
Right. That aligns perfectly with their capacity expansion strategy. They're putting their money where their growth plans are, investing in those tangible assets that are going to drive revenue in the future.
Exactly. And finally, their cash flow from financing activities was negative euro 758.29 million during the first half of FY25. This was mainly due to loan repayments.
Which, again, reinforces their commitment to getting that debt down, which ultimately strengthens their financial position.
Overall, their financial strategy seems to be in sync with their growth objectives. They're taking calculated risks, managing their resources carefully, and making strategic decisions to set themselves up for success in the long term.
It's really impressive how their financial performance aligns with their strategic initiatives, creating a really cohesive and powerful growth story. But we can't forget that behind all these numbers are the people who are making it all happen.
You're absolutely right. The human side of Jyoti CNC is a crucial part of their success. Their focus on employee development and building a culture of innovation plays a huge role in everything they've achieved.
And that's something I really want to explore further. Let's talk about their center of excellence, their R&D efforts, and how they're creating a workforce that's ready to shape the future of manufacturing.
Sounds good. Let's dive into the people and the culture behind Jyoti CNC's success in part 3.
We've talked about Jyoti CNC's financials, their big moves, but like we said, numbers only tell part of the story, right? I want to dig into that human element, see how their culture, their approach to people, all of that is helping them succeed.
It's definitely key, and Jyoti CNC seems to really get that. Their center of excellence is a perfect example. It's not just about training people to run machines. It's about encouraging them to grow, to think differently, and creating a work environment where they feel valued, empowered to contribute.
So what exactly does this center of excellence do? What kind of programs do they offer? How does it actually affect the workforce?
Well, they've got a whole range of programs: skill development, technical training, leadership courses, even opportunities for employees to go back to school, get more education. The goal is to give their people the skills they need, not just for their current jobs, but to move up in the company, grow their careers.
It's like they're saying, we're investing in you, so invest in us. Makes sense, right? By helping their employees develop, they're helping the companies succeed in the long run.
Exactly. And it's not just about technical stuff either. They focus on those soft skills, too: problem solving, communication, teamwork, all those things that are so important for a company to be innovative and work together smoothly.
So they're creating this environment where people are constantly learning, growing, being challenged, and that seems to be paying off, right?
Yeah, definitely. Their employee turnover rate is super low, which tells you people are happy there. They like working for the company.
Well, yeah, if you feel valued, like the company's got your back, you're more likely to stick around, put in the effort, right? You're invested.
Absolutely. And that kind of positive atmosphere probably contributes to their strong innovation culture, too.
Yeah.
It's not enough to have the fancy machines. You need people who are skilled and motivated, constantly looking for ways to improve things, to come up with new ideas.
And speaking of new ideas, their R&D efforts are pretty impressive. We've talked about the GU5, FIE, the Tashion 4FT, and the TS200. What else is going on in their R&D department?
Well, they put a lot of money into their R&D facilities in India and France. They're really pushing the boundaries of what's possible with CNC machining.
But it's not just about making machines that are super high tech, is it? It's about understanding what their customers actually need and then finding solutions that work.
You got it. It's all about the customer. They're constantly getting feedback from their clients, working with them to design custom solutions, and really trying to stay ahead of the curve, anticipate what's coming next in the industry.
So it's more than just selling machines, it's building relationships, real partnerships, and that's a recipe for success in any business.
Absolutely. That customer focus, combined with their commitment to innovation and developing their workforce, creates this amazing cycle that just keeps driving their growth and success.
So big picture, what can we say about Jyoti CNC Automation Ltd? They're doing well financially, making smart choices, and they've built a culture that values people and encourages innovation. Sounds like a winning combination.
Definitely a company to watch. They're not just going with the flow. They're out there shaping the future of manufacturing.
It's been fascinating taking this deep dive with you, really getting to understand what makes this company tick. Lots to think about. Thanks for joining us, and we'll see you next time.